Yeah.
So, of course, all kinds of questions about what does this all really mean?
Yeah, we do have a lot of questions. So joining us tonight at 7 o'clock, we want to go all over this with Stephen Esposito. He is an executive director and a wealth advisor at Morgan Stanley. Thank you for joining us. And first of all, explain what happened today.
Like you said, it was a wild ride. It's been pretty volatile lately in the markets in general as the markets try to find some direction based on all the news that's out there. And you basically had a correction. It really hopefully bottomed today, just accelerate what's been going on in the last week or so. So I just think a lot of nervousness with what's going on geopolitically as well as uncertainty regarding the economy. And it was honestly a long overdue correction was needed, and it happened today. I'm hoping it's over, but I don't know.
We always wonder where that floor goes in the bull market. We'll see if it continues here. But you talk about geopolitical stuff, obviously Russia and Ukraine. The other issue is the Fed and what the Fed is doing with interest rates. Which one of those factors is more important here?
I think probably the Fed right now. I don't think the Fed's going to do much of anything. They'll probably stay on track for maybe 2 or 3 rate hikes this year, which I don't think is that big of a deal. But there's been talk out there of maybe 5, and the market I don't think likes 5. But understand the Fed will raise rates based on the economy. If the economy is doing well and inflation continues, they will raise rates. If not, they won't. So it's really going to be based on the data that's going to make the determination. So I wouldn't factor too many things into what's going on at the Fed right now. I would focus instead on corporate profits. Also knowing that it appears that the variant is starting to die off, so to speak. And if that's the case, the economy could reopen here in Q2, and we could see a pretty nice move in the market if that happens.
So depending if you're a moderate investor or a high risk taker, some people wanted to sell today, some people wanted to buy today. What is the best advice would you give?
In today's correction, it was more along the lines of a rotation out of the stay-at-home stocks who are way overvalued. They were really stretched, and the rest of the what we call cyclical companies that benefit from recovery have been way down in the dumps. So I think you're seeing a rotation out of those companies that really flew pretty high and their valuations were crazy, are now coming down, and I think you'll see a rotation into we call the reopening trade, which would be automobiles and travel stocks and retailers and things like that. So again, I think it's just internal corrections, and I think investors should stay invested, but shift where your money is towards value and maybe some dividend-paying stocks, and I think you'll do fine.
You know, they always say the time to buy is when there's blood on the floor. And we saw a lot of blood on the floor today, but then you never know.
Right.
How do you, what they say, how do you catch a falling knife here?
Right.
What do you say to that average retail investor who's watching this right now? And you kind of alluded to it there, but the average retail investor is really worried about their 401k. Maybe they're looking at retirement 2 years down the line here. What do you say to them?
If you're looking a few years down the road, I wouldn't worry about it right now, but I would focus on where your assets are allocated. I wouldn't be in bonds right now. Interest rates are going up, so that's I don't think a safe bet that you might think it is. I would focus on, again, more value cyclical companies in your mix when you put your portfolio. So look at your choices in your 401k and go that way. I would look at that, but I wouldn't worry. I really wouldn't be afraid of the market right now. I think it's an opportunity.
Yeah, a lot of people are dealing in buying healthcare industry because of the COVID and some of the medications now being created to, you know, treat the symptoms and things like that. So very good advice on that. But just, you know, you want to name any companies we should do specific purchases?
I wish I could name you some companies, but I can, again, go with industries. Look at the travel industry. Look at the retail. Look at the banks. As interest rates go up, that's good for financials. So there's a whole myriad of companies. Think yourself restaurants. What industries will do well if the economy reopens this spring? And continues from there. I think you can see a really big move in many of these companies, assuming we do open and investors and I should say consumers go back. And I do think, by the way, supply chains will catch up. And then fear of inflation may not be as bad as you think. It might be a Trojan horse. So we'll see. But again, I've been doing this 40 years. I would be a buyer here. I wouldn't be a seller.
How do you like that? Well, never bet against the U.S. economy, they always say. Stephen Esposito. Yeah, he's right. Don't bet against them. Stephen Esposito, thank you so much, a voice of reason in all this. Thank you.
Yeah, excellent advice.
Hey, if you like that video, be sure to subscribe to our ABC7 Chicago YouTube channel.